Goods and Services Tax, GST, officially known as the Constitution, 101st Amendment Act, 2016. This amendment introduced a national goods and services tax, GST, in India from the 1st of July 2017. The Goods and Services Tax, GST, is a value-added tax, VAT. It replaces all indirect taxes levied on goods and services by the Indian central and state governments. An empowered union committee was set up by the Vajpayee administration. The committee submitted its report to the government in April 2008 and released its first discussion paper on GST in India in 2009. In April 2008, the EC submitted a report titled A Model and Roadmap for Goods and Services Tax, GST in India. On the 29th of March 2017, CGST, IGST, UTGST, and SGST compensation law passed in Lok Sabha. The Constitution, 122nd Amendment Bill, 2014 was introduced in the Lok Sabha by Finance Minister Arun Jaitley on the 19th of December 2014 and passed by the House on the 6th of May 2015. In the Rajya Sabha, the bill was referred to a select committee on the 14th of May 2015. The Select Committee of the Rajya Sabha submitted its report on the bill on the 22nd of July 2015. The bill was passed by the Rajya Sabha on the 3rd of August 2016, and the amended bill was passed by the Lok Sabha on the 8th of August 2016. The bill, after ratification by the states, received assent from President Pranab Mukherjee on the 8th of September 2016 and was notified in the Gazette of India on the same date. The act was passed in accordance with the provisions of Article 368 of the Constitution and has been ratified by more than half of the state legislatures. On the 12th of August 2016, Assam became the first state to ratify the bill when the Assam Legislative Assembly unanimously approved it. Goods and services are divided into 5 different tax slabs for collection of tax: 0%, 5%, 12%, 18%, and 28%. Petroleum products, alcoholic drinks, and electricity are not taxed under GST and instead are taxed separately by the individual state governments, as per the previous tax system. India adopted a dual GST model, meaning that taxation is administered by both the union and state governments. Transactions made within a single state are levied with central GST, CGST, by the central government state GST, SGST, by the state governments. For interstate transactions and imported goods or services, an integrated GST, IGST, is levied by the central government. HSN Code. India is a member of World Customs Organization, WCO, since 1971. The purpose of HSN codes is to make GST systematic and globally accepted. HSN codes will remove the need to upload the detailed description of the goods. This will save time and make filing easier since GST returns are automated. Rate. The GST is imposed at variable rates on variable items. The rate of GST is 18% for soaps and 28% on washing detergents. GST on movie tickets is based on slabs, with 18% GST for tickets that cost less than Rs. $100 and 28% GST on tickets costing more than Rs. 128% on commercial vehicle and private 5% on ready-made clothes. The rate on under-construction property booking is 12%. Some industries and products were exempted by the government and remain untaxed under GST, such as dairy products, products of milling industries, fresh vegetables and fruits, meat products, and other groceries and necessities. GST will be levied on petroleum and petroleum products. E-way bill. An e-way bill is an electronic permit for shipping goods similar to a way bill. It was made compulsory for interstate transport of goods from the 1st of June 2018. It is required to be generated for every interstate movement of goods beyond 10 kilometers, 6.2 miles, and the threshold limit of Rs. 50,000. It is a paperless technology solution and critical anti-evasion tool to check tax leakages and clamping down on trade that currently happens on a cash basis. A unique e-way bill number, EBN, is generated either by the supplier, recipient, or the transporter. The EBN can be a printout, SMS, or written on invoice is valid. The GST tax officers tally the e-way bill listed goods with goods carried with it. Transporter ID and PIN code now compulsory from 01 Oct 2018. It is a critical compliance-related GSTN project under the GST, with a capacity to process 75 lakh e-way bills per day. Intrastate e-way bill. The 5 states piloting this project are Andhra Pradesh, Gujarat, Kerala, Telangana, and Uttar Pradesh, which account for 61.8% of the interstate e-way bills, started mandatory intrastate e-way bill from the 15th of April 2018 to further reduce tax evasion. All states are mandated to introduce it by the 30th of May 2018. Reverse charge mechanism, RCM, is a system in GST where the receiver pays the tax on behalf of unregistered smaller material and service suppliers. The receiver of the goods is eligible for input tax credit, while the unregistered dealer is not. The central government released Rs 35,298 crore to the state under GST compensation. For the implementation, this amount was given to the state to compensate the revenue. Central government has to face many criticisms for delay in compensation. Goods kept outside the GST alcohol for human consumption, that is, not for commercial use. Petrol and petroleum products, GST will apply at a later date, that is, petroleum crude, high-speed diesel, motor spirit, petrol, natural gas, aviation turbine fuel. QRMP scheme. This is a recent amendment in GST taxation system. If a taxpayer opts for this scheme, he will have to file GST returns on quarterly basis instead of regular monthly basis, but tax payment will have to be done monthly. QRMP means quarterly return monthly payment. Revenue distribution revenue earned from GST, intrastate transaction, seller and buyer both are located in same state, is shared equally on 50 basis between central and respective state governments. If state of Goa has collected a total GST revenue, intrastate transaction, seller and buyer both are located in same state, of 100 crores in month of January, then share of central government, CGST, will be 50 crores and remaining 50 crores will be share of Goa state government, SGST, for month of January. For distribution of IGST, interstate transaction, seller and buyer both are located in different states. Collection. Revenue is collected by central government and shared with state where good is imported. Example. A is a seller located in state of Goa selling a product to B, a buyer of that product located in state of Punjab. Then IGST collected from this transaction will be shared equally on 50 basis between central and Punjab state governments